Hello and welcome to Money Control Stock Market Watch. And remember, the markets have done well yesterday in trades. Mid-caps performed very well and Reliance Industries touched an all-time high. Let's welcome on the show Jigar Mistry, the co-founder of Buoyant Capital, to understand how the retail investors can make the best returns out of their equity investments. Jigar, always a pleasure to welcome you on CNN News 18. My first question, how do you see in the recent time the market developing given the volatility that we have seen? So what should retail investors look at?
Good morning, Nisha. Thank you for inviting me again. You are right. See, with markets hitting the way they have been, it is easy to get sort of clobbered into a lot of this fad of the moment, idea of the moment sort of thing.
Yes.
The right time, in our opinion, and the right thing to do at this juncture is sort of take a step back and evaluate what sort of themes make sense. And the best test one would like to put here is that if the stock were to correct 15 or 20%, would you be looking to buy these names or sell the names that you are currently investing? See, because the small cap index has outperformed in excess of 100 percentage points, and every day you see a lot of these stocks flying, which do not at times make a lot of sense. The way we are approaching is that, we used to have about 70-80% allocation to small and mid cap in the last year, July, August, post-COVID. Increasingly, we are increasing the allocation to a lot of large, stable cash flow businesses. And we have discussed a few over the last couple of meetings that we have had. But happy to answer a few specific questions that you might have.
Yes. So, Jigar, you said that it's right time to reassess your portfolio, and also we can't catch the bottom, we know, in the market. But Jigar, like some of the themes develop whenever there is issue from China and news from China, like specialty chemicals. Now, a conservative retail investor, should they be looking at this sector at all?
Yes. So, there is no denying that it has been the best performing sector over the last decade. Stocks are up the entire sector is up 50x. But there are a few names that are still interesting to us. The theme continues to remain solid. The ones that we have even discussed previously, which have gone up with the rest of them, but still offer decent value. One is Gujarat Fluorochem. The other is Sudarshan Chemicals. Both of them, Sudarshan is the world's third largest pigment manufacturer, with the activity happening in the top two companies in the world that will benefit. Fluorochem is a typical, fluorination chain, same like SRF and Navin Fluoring, but went a different direction. Now it is sort of course-correcting, getting back to fluoro specialty and the new fluoropolymers, both of which should aid the profit growth over the next couple of years. Trades at about 15 odd times EV/EBITDA, which is reasonable. It's not 40-50x like a few of its peers. And there is a decent runway for growth. So in the specialty chemical space, I would prefer Gujarat Fluorochem and Sudarshan Chemical, both of which we currently own in the fund.
Right. What about telecom? Now Reliance Industries has been hitting fresh new highs, and there has been some good developments in the sector and some bad from the regulatory front. How will you play telecom? Because this is something which is very close to the heart of the retail investors. They can see and use those brands. So the natural instinct of looking at these shares is there.
True, Nisha. But see, one thing is very certain, that if there is a certainty that Vodafone Idea will continue to survive, which is steadily emerging every passing day, then price hike is not far off, right? And Vodafone has gone on record saying that we want a price hike. Bharti has gone on record in public forum saying that the industry needs to hike prices. So eventually, I think the ball is in Reliance's court. And as and when that happens, I think some of it is priced, but how far can the price increases take us still remains to be seen, and therefore it's an interesting sector. Now, in a binary event like this, the company that benefits the most is Vodafone Idea, no doubt, because it is not pricing in a going concern sort of a valuation. But it is as well, a binary event, and therefore if it doesn't transpire, takes longer to transpire, or some event in between happens, becomes a little bit of a riskier investment. So Bharti and Bharti is a clear-cut sort of winner in here. We have a position in that. Reliance, part of the valuations sort of flow through from the telecom. But also on the other side, right, the refinery margins, the petchem margins, all of which our team thinks are going to be very strong. So it's not, Reliance would not be a direct play on telecom per se, but given that everything else is going reasonably okay, you might as well consider sort of Reliance into the fold.
All right, so Street is also looking for that low-cost smartphone launch from Reliance Industries. But Jigar, what are the good areas and pockets for investors who are conservative in nature? Because we saw the real estate theme develop, now the stocks rose, now they have been slammed down also. So what could be the safe pockets according to you?
I think, Nisha, the strategy could change in, right, more than the sectors. You could actually, so we put out a study last Friday, and you can check that out on our website. We actually, looked at what would have happened had you started investing at the peak of 2007, the global financial crisis, and had you started investing at the bottom of the crisis. And the difference between, the only requirement here is that you need discipline. You need to start, invest every month. And the difference between had you started at the top versus had you started at the bottom is a few basis points. It's actually 30 basis points in CAGR. So I think the need of the hour today is that instead of, getting fully, if you are not invested in equities, you can start investing now, but have a much more disciplined approach and, keep investing every single month. That will make you feel a little bit sort of out of place, that markets are going up every day and I'm missing out. But I think that sort of discipline is required given where we are in some terms of the market. So that is as far as the theme is concerned. Now, as far as the sector is concerned, I started by saying that one should not look at it. But I think one of the sectors that play out here is banking and financials. I do remember, sounding like a broken record, saying the same thing for last 3 or 4 meetings. But banking is one sector which hasn't performed, and with the numbers coming out in the second quarter, we could see a lot of that correction being more or less done. And therefore, you can take a pick. The ones that we own are ICICI, SBI, HDFC, Kotak, and Canara Bank. These are the ones we own. But you can take a pick in terms of your sort of bank that you want to own. And that remains one of the preferred.
All right, good thoughts there, Jigar, but completely out of time. So don't have the fear of missing out. You can start investing even today, but in a staggered and cautious manner. Thanks, Jigar, for that. And with that, it's a wrap on Money Control Stock Market Watch.
Well, thanks for that, Nisha.